And Tata Motors reported a rather disappointing set of first quarter numbers, missing street estimates with profits falling 23% to 1,726 crore rupees. Now, this is the third straight quarterly dip in profits that Tata Motors is reporting as the domestic car market struggles to pick up for the company. But it was Jaguar Land Rover which once again came to the rescue of Tata Motors. JLR reported a strong first quarter numbers with profits surging 28% to come in at 304 million pounds, and the revenues too grew by about 12% to come in at 4.1 billion pounds. The margins too were healthy, coming in at over 16% for the company. And also remember, it was the dividends from JLR arm which was the big booster for Tata Motors in this particular quarter. Let's hear out the management on what they have to say about the performance in the quarter.
I think the margins will continue to be under pressure for the industry in general. The external environment is relatively weak in terms of, particularly for the automotive industry, in terms of the key drivers of the demand. I'm talking industry in general. I'm not going to give you a number for our forecast margins for the future, but generally margins will be under significant pressure this year for all.
On inventory levels, we started sharply correcting our inventories in channel and with ourselves as well, starting from Q4 of last year, so starting from January, etc. And we hold fairly healthy inventory levels both in channel and with us. Yeah. Our wholesales and retails are in line, and retails tend to be better than our wholesales.
All right, to get more color on which way Tata Motors is headed and what is the correct analysis of those numbers, let's go straight across to our research desk person Yatin Mota joining us with all the analysis. Yatin.
Well, Tata Motors consolidated quarter one earnings were in line with what the analysts were expecting. If you look at the consolidated profits, there was a decline of nearly 23% on a year-on-year basis, and profits came in at 1,726 crores. The decline was largely because of a forex hit of nearly 200 crores and the dismal performance of the standalone entity, which is the domestic commercial vehicle as well as the passenger car segment business. Also, if you look at Tata Motors from the JLR perspective, a big operating margin beat coming in for JLR. The JLR margins came in at 16.5% versus our ET poll of 14.8%. Also, if you look at the JLR profits, they came in at 304 million British pounds versus our estimate of 250 million British pounds. So the JLR product mix as well as the margin performance continues to be better off versus what was expected. Of course, the management was quite optimistic on the Chinese as well as the American market growth. In fact, for JLR, the management is targeting to sell close to 1 lakh units in the Chinese markets. Slightly optimistic target, but they are expecting that target to be met going forward this year.